The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 16th day, middle of the month of June. My pleasure to be as great hosts we've had. Hopefully we can keep that standard up. So a couple of things going on here. I thought as Technical Friday, and since I will not be here next week, if there's any chance at all, maybe by Wednesday I might be able to do a show. I just don't know yet. Let me go through my thinking. Let me go through the technicals. Let me go through why I've got the positions, why we have for my subscribers to my opening call, and then give you parameters for what I'm expecting next week. Let's just do that one at a time. So let me do this. This is the E-mini down almost 10, and you finally made that peak C1, C2 top. Am I going to explain it? Yeah, I'll explain it because we always have new listeners. I know that from people that send emails, emails, and little notes to say just started listening or been listening, and can you explain some things? In the Chapman wave methodology, what we look for is to try to identify the most lowest obvious low bar and merely count each successively higher peak, alphabetized, uppercase on the way up, lowercase on the way down, letters A through G, just like on the piano. There's a big difference. Like on the piano, when you get to when you get to a certain letter, if you've used up all your letters, there's no H, so you've got to start over again, right? So the same thing here. There is no H, but it's the fourth highest peak, that peak D, where other things can happen. Could recycle higher, but it could pull back sharply. It could have a serious time sideways move. That's kind of where we start to look for things. That's not the case in every single instance, but believe me, since I've been here since 2002 or whatever it is, there must be at least tens of thousands of charts we've looked at over the years. And those Ds are really important. Okay, move it away. Here we go. A long time ago, I figured out, and we did this on air actually, a period about 2 years ago, I think it was, we had Peter, who used to always be looking at currencies, still looks at currencies, always talking about currencies. And we were looking at the euro-dollar currency pair, and I kept looking and saying, Peter, this is a technique that I've been working on for a long time, and I really think it's going to work. And that is that we don't get to a D. Instead, we see the price of the euro-dollar currency pair fail just under the last peak C, and that is what I call a phantom peak, and I call it a peak C1. And a C2. I cannot put a down arrow because it isn't true to my thesis that a down arrow only starts from a D, a higher peak, fourth peak D. But I put a red plus sign. And if it fails just under there and all the technicals are failing and suggest that it just missed making a new high by a fraction, but everything else is in place, that could be a D. Well, the reason why I'm making this little statement right here is the E-mini, whether it's the June or the September contract or the S&P or the SPY, failed by a fraction to go to above peak C, in this case 2443.50. The other day, 3 days ago, it went to 2443.25, missed it by 25 cents. You'll see that the MACD wasn't as high as it was before. You see the stochastic was fading, and to me, that is a sign in my work that says, go to your shorter time frame and see if you've got a corresponding failure in, say, the 120-minute chart. If so, watch out. And we made the peak F at 2443.25, and we started to pull back. Okay, get that out the way. Done. It retested. 2414 was the low on around about the 12th of June. The low yesterday was 2416.25, just above it. And now the high is much lower than the previous high. The high so far in the 2436s. All right. So now let's take that away. Now let's go through this. One of the things we've been looking, and besides that, I treated this as a Chapman Wave 5. It's still not 100% confirmed, but I'm treating it as a Chapman Wave 5. What is a Chapman Wave 5? The genesis started off with Elliott Wave, and I found Elliott Wave all the years. It's just been, there are too many ifs, ands, or buts. Yep, it does work. I know people use it all the time very well. In my work, I found, and people had said to me, that the Chapman wave clarifies the Elliott wave, which I thought was a mystery. But over the past 2 years, as I've been working at it closer and closer, my Chapman wave 5 seems to be working for me most of the time. Sometimes I have to move a little bit to the right or the left and then put the position on, but at least it's a tremendous help. Now, what I was looking at in the daily 120-minute Dow chart was that we went to the Chapman Wave 5 at a peak D. That's what I was anticipating the other day, and the market spiked to 21,391. It was the leading, the Dow, because it has so many financials, 5, really was helped and punched to a new high while the others lagged. And here we are. Dow goes to a Chapman Wave 5 peak D. I drew in for my subscribers this morning, yesterday actually, the arch formation. I put in a 1, I put in a 3, and I put in a 4. I don't know if this is going to work out, but this will be negated. Chapman Wave 5 will be negated if there's a punch to 21,392, just 1 penny higher than that peak D. And I have to change the lettering, the numbers, sorry, the numbers, not the lettering. But if there's a move by Monday or Tuesday below 21,261, the low at 11:30 on the 15th, yesterday, that will start 4 down. If you're looking at the MACD and stochastic on the same chart, the 120-minute Dow, look, we're under the 9-period moving average. The MACD has crossed negative, stochastics at 80%. That's good, but it's real close to turning down further, and therefore we're on the cusp of either sliding further or spiking at least to the 21,356s, which will make a new gray leg B to the upside. Meantime, we are short. We are considering to stay short as long as we can at this particular time, short the Dow, short some other indices and sectors. And what's really important about that is that those others have been working quite well. Well, in a way, this has also worked well, but not as well as the others so far. Possible peak F in the daily of the Dow at 21,379. Hasn't broken the 9-period moving average of 21,274. The moment that gets taken out, that's a different kettle of fish, because 21,166, the 20-period exponential red line over here, moving average, it beckons. And what I'd say to subscribers, the MACD is still good. Stochastics way over 80% at 93%. That's good. So it's going to have to be price that tells us. So this might be a little stalling options expiration. I think we've got a kind of a stall right now. We haven't broken down. There was an opportunity this morning for the Dow to punch into the 21,380s. It couldn't do it. Let's see if it does later in the day. I don't think so. But thinking and acting are two separate things. So that's what we're looking at there. The 120-minute chart gave a clue yesterday, as well as it did the day before, that with a very high trend reading, there's a good chance that, in fact, there could be a 9 to 11-point rally in the E-minis. And so far, we've had it yesterday, we had it the day before, we had yesterday. So now we're going to see what happens for the rest of the day. Dow's down 23, S&P's down 7. I'll be right back. Basil Chapman, Tiger.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. So now we are. So now we looked at the E-mini, the S&P E-mini. You'll see I drew in the oval pattern because that's exactly what it was doing. But sometimes the oval pattern is merely showing us the arch formation. And I wanted to show that if there was a break under the 9-period exponential moving average of 24.28, there's a chance that the low bar of yesterday at 24.1625 could be tested. So just watching this real closely because it is under there. It's at 24.24 right now. Now let's get out of that and I'll show you the S&P. So the Dow, I gave you the parameters. The S&P has this. I didn't put it in here. I meant to put it in. I did it on the SPY, but I'll do it now on the S&P. So the S&P cash made a peak C1, C2, 244.20 on the 9th, and 240, was that 242? 243.75 on the 14th, just a little bit below. Now what we're looking at is that the 9-period, it's under the 9-period moving average. You can see, in this case, I'll just draw the arch formation because it's going to be really important. So it does allow for a sudden spike to the upside, but time is very important. I think by Monday, the absolute latest, if it can't break into the 24.47s, that's just going to, instead, it starts to test 24.18s. That's going to be a big problem. All right, so I've given you all this information. In terms of the Chapman Wave methodology, I didn't mention in the Dow that the speed with which we went from a peak D to a leg E is really important. I am going to mention now that I've got an E notated for the weekly chart. The MACD is okay. Stochastic strong at 91%. So it would take a break at 24.26. And I just had an email saying that the put buying strike 42.50. No, that's UT. Where did it go? Oh, put. Just a put buying, a spread has been put on, and I think that's not a bad idea. But I think put is my bias right now. We don't have anything in the put side, but I'm saying that the S&P looks like it wants to test lower registers. And if you're looking at 24.26 where it is now, 24.04 is the 9-period exponential moving average. That's 250 points in the Dow to the downside, and 22 to the downside than the S&P. So I don't know yet. I think by Tuesday we'll have a lot better grasp on the downside potential. And all of it will be resting on how wide the parameters are between the slow-moving average and the fast-moving average, both the MACD and the slow stochastic a week from today, Friday, if there is a turn to the downside. That's going to suggest what happens not just in the weekly chart, but in the monthly chart. Will it take all of July with no new high to form a peak? And now look what we're looking at. Finally, you've got the S&P in leg D. Finally, you've got the IWM in leg D in the monthly. Peak E probably absolutely certain by the end of the day. Peak E in the weekly chart and a peak D in the daily. And I'm going to finally be able to put a down arrow. We'll wait until the end of the day before I do that. So IWM is at 139.47, turned down quite sharply. We are quite heavily short, and we'll just have to let the parameters tell us what's next. Meantime, at 139.48, 138.16 is the 50-period moving average that I think is going to be hit by about Tuesday if this momentum to the downside continues into the close today. So now let's look at the QQQ. Why? It's very important. QQQ series trading at sitting at the 137.98 level. Second time yesterday that it hit the 50-period exponential moving average right there. If you're looking at the SARS the other day when it plunged, that was on the 9th, a week ago. Yeah, a week ago. Look what happened. It plunged right through it and below the 9-period moving average, which is up at 140.03. I think this is a very poor chart formation, and I believe this is a peak F, Chapman Wave 5 in the weekly chart. It's only a leg C in the monthly. Looking out, that's very positive. I think short to intermediate term, we have a problem here because look at how many Ds we have. Okay, Qs are in C and the SMHs are in leg C in the monthly, but way overbought. And here as well, we are short the SMHs in many, many different positions. But this is what's really important. At 84.14, I thought today there was a chance it could touch 85.35 to complete that H pattern, to go to an M pattern. Instead, it looks like it's trying just to stay in the H pattern. And if it takes out 84.09 by Monday or Tuesday, can make it even by Wednesday. It has to be next week. If it takes it out, not only does the daily go, at this particular point, it is in a sell mode. I haven't put it in. I should have because I had so many things here. But there is a down arrow. The daily is in a sell mode. The weekly hasn't even given a sell signal. That's how powerful it's been. Hasn't given a sell signal yet. If there's a close under 83, it immediately goes from a sell signal to a sell mode almost in one swoop. And the monthly chart is still very bullish in leg E. I'm calling it E. I've seen cases where you've had a move like this that turns out in the end to be an F. I just don't think so. I think there's still going to be residual strength later in the year. Just needs a timeout. Now let's go to the nitty-gritties. Gold. Gold is up, up $2 at 12.57. From the 200, remember yesterday we spoke about the importance of this 200-period exponential moving average in the daily, the orange chart, but the MACD is still very negative. The stochastic is very poor, and it's made a peak C1, C2. So far, it looks like that kind of double top in the weekly chart, and that's just suggesting to me that at least for now, we've got to watch gold real closely. It would be so great to pick up these gold stocks that are $1, $2, and $3 and have another one of those big rallies. I think we got to have a little patience here, because if it was going to move, it would have moved already, and it hasn't done that, moved to the upside already. And this is saying to me that the monthly chart is still really not a very bullish chart. It's holding well, but that doesn't mean it's bullish. It just means it's holding well. It's not breaking down. So gold at 12.57, all it needs is to take out 12.51 to 12.49 support, and then I think it's going to be a much deeper correction. Silver SI right now, silver is at 16.65. It needs both gold and silver need within. I don't think it can take too long. It has to be Tuesday or Wednesday. They both have to spike powerfully above the 9-period exponential moving average, and so far they haven't shown the strength. If you look at the dollar, now this is going to be so interesting. Look at the dollar, not good at all. It's down 35 cents at 97.13. And I'll go through this again. TRCCI, I don't know what it is. But this commodity index hasn't updated today. It's still down, but it's higher than it was yesterday. I don't know if there can be an island reversal. I'm watching this real closely. I don't want to take time now. I spent yesterday talking about it. Just make it, it's a 397. The TRCCI, the Thomson Reuters equal weighted continuous contract, and a really ugly weekly chart. I wouldn't be surprised if next week it tries for an inside week. We'll watch it closely. Look at high-grade copper, HG. High-grade copper still very weak, just in this trading band. Looks like it wants to test 2.53. The 200-period moving average is at 2.56. And here we go with crude oil. Crude oil is trying desperately to rally. It hasn't been able to hold. It's up 37 cents at 44.83. And the TLT, this is big. The TLT is having a good day. It's up 30 cents today. Wow, high-level consolidation. I need to talk about it. I'll be back straight after this break. Dow's down 26, S&P's down 6.5. Basil Chapman, Tiger Technicians out.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So I forgot to do this. Yes, the 10-minute chart. It made how important are peak Ds? So there's a D, and then it had a spiral to the upside, and that became a second peak D, but an E. And then you started a peak A, B, C, boom, D. That was at about 5 o'clock, whatever day that was. And time flies when you're having fun, on the 15th. And then it pulls back and starts an A to B to C. And then it goes to a D again. And that D was the final D. And that was a 310 this morning at 24.36.75. And the E-mini 10-minute chart. And now it's gone trough A, trough B. trough C, trough D, trough E, trough F. F is where you think other things can happen. The T turns up, histogram improves. That's the vertical lines right there, the 0% line it's called. And then the stochastic makes a nice soft W with a positive divergence on balance volume is saying, don't get too carried away. It could bounce, but it'll only be a bounce. And here we are in this bounce in gray leg A, just above the 9-period moving average. Numbers to watch are about 24, 26, 75. You can have a slightly stronger rally, but that's about where I'd expect between there and 24, 28 that you make the H formation and start turning down again, if it can even get there. But watch out, a close on any 2-minute chart, 2 closes out of 3 below 24. 24 was that 28? I moved it way too quickly. 24.18. I'm sorry, 24.19. Not good, not good at all. But in the meantime, chop, 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 up and down, up and down. So what we're looking at here is in the TLT, there was this huge gap, a 2-point gap after the Fed announcement on Wednesday. And it goes from the 124.52 high on that bar, the daily close on the 13th, and bam, it jumps up on the 14th. 14th was Wednesday, Thursday, Friday. Yeah, on the 14th, and it hits a high of 126.71. Then it pulls back and has an inside day, a doji, small candle doji yesterday. And I'm saying to myself, it should have pulled back and started to fill the gap a little bit. I mean, I shouldn't complain. We're along from 123. It's at 126.40 for the T-bonds. That's a big move. But that's what you'd expect, right? However, look what's happened. The candle uses yesterday's closing price of 125.83 as what? As a gap to the upside, as a springboard. We opened today at 126.08. 126.01 is the low, and it's trading right now at 126.40. What's going on with this picture? And look at the weekly chart improving. And if I go to my yield chart, you'll see, look, where is the yield chart? There it is. Down the lows, testing the channel support. This is where you usually get, I don't crowd out this chart. I'll just do it for now and then take it away. This is a Chapman wave inside track support buy area, and yet it's going to be breaking below there. I'll make that red just so for argument's sake, I've got something that you can visualize. Yeah, right at the bottom. It's already in the 10-year. It's already kind of taken it out. Hasn't closed below it at 21.46, but the low this week was 21.03. And here's the 5-year yield. What is this saying? Well, this is saying that there must be some softness going on. Otherwise, bond yields wouldn't be so low. But wait a minute. XLF is moving higher. The wood, which is the iShares Global Timber and Forestry ETF, is kind of in the middle of the range of the week. Had a high of 62.36, and it's in leg G/C, and the HGX, the Philadelphia Housing Sector Index, very nicely, also in the middle of the range, had a high of 283.78 in leg F. So these things are becoming a little toppy, haven't given a signal yet. If you look at them in my chart, if I can get the right chart right there, if you can look at them in my chart, wood, which is the Timber and Forestry ETF, trading at 61.69, has got a peak C. There's no other way that I could count it. I'm suspecting that it has one more pop to the upside for leg D, and that'll be leg G/C in the weekly. And then we've got to be careful for the following week. That's my thinking. It could fail here, but I don't know what I'd call it. Call it a high with the peak C in the daily, very unusual. Usually it's D or more before it really turns down. But wait a minute, look at the HGX. The HGX is the Philadelphia Housing Sector Index that gapped up. It's got a doji high of a peak F, pulling back today again at 94. I think this is getting a little toppy. And G/C in the weekly, that says, yeah, okay, maybe we go sideways before we go higher again. So in the meantime, back at the ranch, make it very clear. The monthly chart has had a spectacular move. This is, look at this, from the 2005, I believe it was, high. Yep, 2005, July, at 293.66. It goes down a little bit. It goes from 293 down to 54. I would say that's a little bit of a pullback, right? What is it, 86% or something like that? Very, very big. And now what it's done in the daily, it's come back, and in the monthly, the high we said was 280 something. It's just under in leg C, in leg F/C, just under the all-time high. The MACD's at 94, very strong, and stochastic good. So the reason why I wanted to take today, and especially stay so that I could do this hour, is I wanted to go through to say this is a really bifurcated market. It's favoring. Look, let me keep talking about bifurcated. Look, housing sector, obviously with lower yields, that's really good, right? But wait a minute. Why, if the rule is that the bank stocks do very well when yields go higher, why on earth is the XLF at 24.33? What was the low today? 24.22. Let me just have a look at something here. 24, okay. We're long a position in the XLF, and it's holding very well. Well, I think it's going to go to a leg D. That doesn't make sense. You know what I think? The bank fees and everything, if you've done anything with a bank and you don't have that special account that gives you a nice big cushion and they call you a favored customer, I don't know what everyone has a different term, you can get clobbered a lot by being late in a payment or just doing something wrong or whatever it is. The fees are incredibly high. And I think that all of these things are cumulative, and that's why the banks are doing well. And I think they've got, most of them so far have got their books in order. I think Dodd-Frank has done something. Of course, we'll be loosening the Dodd-Frank. Just as I remember yelling and screaming when Clinton started loosening, I said, no, how can you do it? How can banks and real estate, how can they all be tied together? Here, I don't want to get caught in that. We don't have time for it. So this right now for the XLF says, there's a chance we get close to the 25-30 high of March in the cup formation. But if there is a right shoulder failure anytime going into Tuesday, let's call it Wednesday at this time, Wednesday between 11 and 1 o'clock Eastern time in the day. My thinking is that if there is a pullback below 23.80 in the XLF, it's done for now. It's going to be in a trading range. It will not make the highs. It has to persist. It has to have a good day like today, start of week, and then come back strong. And it has to also push into the 24.60s. And it must do that by Tuesday or Wednesday, middle of Wednesday at the latest. And then I think it's going to do quite well. All right, I'll be back. Basil Chapman, Dow's down 6, S&P's down 4, coming.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, we're back, and the Dow's down 3, S&P's down 3.5. But remember, just now it was down 7, so it's coming back nicely. It's options exploration, so all sorts of things can happen. Hey, this is what I want to look at. We had a call of Victor about a week ago, and we were looking at a couple of things, and he also wanted to look at Hornbeck Offshore Services, HOS. It was trading at about the 170s, 182, I can't remember exactly. And I said to him at the time, I'm going to say give it a little bit. It is improving, but let's look at it in a few days' time. So he calls me back, and we looked at something else, but then we also looked at HOS. And what I said to him yesterday was, this is the first time I can actually say I like it. I like it for a couple of reasons. So I just don't remember if I said to him, because we had a lot of different questions asked yesterday, whether I said to him, you can start a position now. But what I had said, if it holds 178, I think I said, that's $1.78, that is. Yes, because this one, it's the first time that I'm seeing the technicals really improving. It hasn't broken to the left side. With like many of the other oil service stocks, this is an oil service, Hornbeck Offshore Services. And I said, within 2 days, we should know a lot more. Well, it just got a new credit facility. I don't know if the credit facility or whether it got a new credit line of $300 million. It's a credit facility. I don't know what that actually means. What does it mean? It's an offshore. Why would it get it? No, I think it has a credit line, maybe. Whatever it is, it's up 37% to $2.70. It hit $2.93. Beautiful. So I'm hoping, I don't want to go back and replay it. I'm hoping I said at least start a little position and then you can add to it. But congratulations, Victor. You had your eye on the prize, and I hope it was successful. Wow. So now let's go to Ben in Tallahassee. Yep, Ben, how are you?
Good, Basil. How are you?
I'm well, thank you.
Great. So getting your Trader's Corner, I'm tempted to just add to my short position on the semis because I'm attempting to play, some of these VIX positions, but what I find is, as I know you know all too well, unless you go straight down for a couple days and you don't time it absolutely perfect, forget it. So I'm just thinking, stick with the weakest, and on this little bounce here, maybe add to just that, where it just feels good that it's got another leg down. What are your thoughts?
So, okay, that's a very good point. So what we're looking at, folks, is the SMHs. It's the Semiconductor Market Vectors ETF, trading at 84.28. We are short the semiconductors via both this and the SOXS, which is the 3 times short position. However, the reason why I want you to stick with these is that for the explanation that you just gave is right on point. So I decided that, for instance, TVIX is the VIX index position that we've often over the years taken, and I've kind of been laying off it for a while. What I did say today is that if the what did I go? Oh, the UVXI is the one that we've been looking at. And I did say that if it hit a certain number, didn't I do that? let me just read it again.
Yeah, you did. Yeah,
I said nibble
nibble
if it hits a certain number and it hasn't gotten to that number. And the reason why that number is low down is for a number of reasons. Now, this is what I was thinking. Because I had the Chapman wave trend gauge flashing for 2 days in a row, and we saw both a sharp pullback, which is the reason why the VIX, the trend went very high, and then the snapback, is that there was a chance, and I've seen it just enough times to make me say, okay, keep it in mind that it could happen, and that is that sometimes a peak C1, peak C2, double top, slight failure on the C2 side of it, can eventually land up seeing that peak D, a leg D to a peak D. Well, because of that, I said, I don't know. I don't want to mess with the VIX right now because the VIX and I was sent an email yesterday at the end of my show. Didn't have time to talk about it, and the person said, the VIX is still pretty low, meaning you might be going short, but be careful. The VIX is low. And now what I've done is I've done a little bit of a study, and Patricia sent me a fabulous thing that's in stockcharts.com, I think it's stockcharts, about someone who's did a great report on the VIX index and the correlation between the VIX spiking and what happens to the market soon afterwards. And I looked at it, and it's very interesting, but I also took it very seriously because as I lined everything up, it said it doesn't work precisely. There could be a delay, and sometimes the delay is just enough to make the high VIX a serious low in the market. So I'm stepping back, and I say to myself, okay, the Dow is acting extremely well. The MACD and stochastic's good. The S&P, let me go to the S&P right now because I want to put that into the package here. The S&P is hugging the 9-period exponential moving average. The MACD turned down, stochastic's turned down, but that peak C1, C2 acts like a magnet until the further you can go away, you need something, a benchmark, and the benchmark for me on the S&P is it needs to close below the low of the 9th, which is 2415.70. That low, if once it closes below it, all of a sudden the magnet is switched around. You know what happens to the magnet and a piece of metal? On the one hand, the magnet attracts, and if you flip the magnet around, it repels. I want the 9-period exponential moving average now and the peak C1, C2, 2445 area to become a repellent zone. We don't have that yet. So it might be Monday or Tuesday where I suddenly say, okay, now the risk reward in the VIX is much better. But at this point, because there was a chance that there could be a spike to a new high, it still is a chance. I don't think it's possible, but there's a chance that maybe we get that by Monday. I'm saying hold off on the VIX. I think you've got exactly the right idea. So now let me go and say.
And do you feel your needle's biased on a consolidation here much more than another surge up short term?
Because of the XLF, you call it the needle, my gauges are all saying first think consolidation as a rotational market unfolds. The market spelled out really clearly from a week ago Friday that if the NDX can drop 100 and something points and the Dow goes up 50, there is a bifurcation. And that bifurcation is going to be resolved at some point. So I think you're absolutely right. Keep your eye on the weakest link. What was the strongest is now becoming the weakest. That's the SMHs. Put that together with the Qs, which is down. The Qs are down 0.74%, down 1 at 138. Has no strength, testing the 50-period moving average. I'm suspecting this is going to be a peak F-top. I think you're correct. Focus in, as I've tried to do, on what I think are the weaker sectors. Why? Because bounces should fail and make lower lows and lower highs, whereas we don't know for sure just yet with the strength of the Dow, the strength of the XLF, that's the S&P financials, whether or not the bounces are going to take the markets just in those sectors to new highs, which will buoy the SMHs, the semis as well. But I think that for now, it looks to me as if when I go through, I'm not going to do it now. When I go through all the different semis, they really are not showing. Even Intel had a good news the other day, and what has it done? It's got an A, B, C, D. It's made a peak D double top arch formation, assessing the lows of the arch.
Yep,
I
good.
think
Thanks
you're
a
right,
lot, and great job on these identifying these rotations. Phenomenal. Thanks.
Thank you very much. I appreciate it. Thank you, Ben. Have a great weekend. We'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So the euro-dollar currency pair had this rogue wave peak G. You remember just 3 days ago, I spoke about that yesterday. MACD is very poor. Stochastics at 47%. Seems to want to be going down even further. It's got a leg D in the weekly. I think the euro dollar is going to pull back. Consolidation, I'm calling it maybe 1.10, 1.107 to 1.100, no, 1.107 to 1.105 area probably over the next 2 weeks or so. And that says to me that the dollar doesn't have to rally very much, but it could just kind of wiggle to the upside. It's really not looking very good, but the weekly candle is just showing the first sign of, can I call it strength after all that? But let's just put it a little bit of sunshine, just like the cloudy weather we've got right now. And I think it has a chance to bounce to the 97, 99, 9-period moving average over the next 2 weeks, as long as it doesn't hit 96.10, all right, over the next week. And that says to me that gold needs a little more time. But I think that gold, let's see, someone asked me, what is that XLE? I always forget, XLE. Yeah, XLE at 65.75. Yeah, it's got that that arch pattern, very quick A, uppercase A straight up and straight down. If it holds nicely here at 65, holds 65.08, I think the XLE is telling us, okay, H goes to an M pattern, could have a bounce towards the 67s, and that corresponds, what was I looking at just a moment ago? Corresponds to, who was it? Got to find it quickly now. I can't find it, but yeah, looking at CHK, I believe it was CHK and the oil service, Chesapeake Energy Service. That's the same pattern. So it says to me, attempting to find a bottom. It means that the downside at 507 and Chesapeake CHK up 8 cents at 508. You've got yourself a nice batch of support in the 490s to 480s. That's the way I would look at it. That's the way I'd look at the XLE. So that's kind of what I'm looking at. Some kind of a basing format. If it does break to the upside, maybe that's when gold and silver moves up and the dollar starts to retest those lows. So this is a very important week in the sense that there are so many inflection or deflection moments occurring right now. Inflection meaning they hit a level of importance, support and resistance, and now it's going right through it. Instead of stopping and reversing, it's going right through it. And in other cases, like the TLT, and Paul just asked, what about the TLT? Could you tell me, is the TLT should higher or lower rates? The TLT going higher is saying lower rates. Holding here is saying rates are not going to go up right at this particular point. The moment the TLT, which is at 126.36, breaks 124.50 support, 2 points lower, rates will start to move up again. And that's make it real clear. Yeah, let me do this because I had a bunch of questions. Let me go to the RTH, that's the retail index. Of course, Amazon's taking over, has bought out Whole Foods. Fantastic. I remember when Whole Foods was right here in Cambridge down on Mass Ave, I believe it was. All right, so RTH 80.55, down $1.29. This is going to be important. This is a peak D. A peak is E in the daily, a peak D in the weekly chart, and a leg F/C. I am watching retail really closely here, and that's the reason why this bifurcated market means try to stick with things that are working well. Watch out for the ones that were working well and are starting to pull back. So I'll be away next week, as I say. I just don't know if I'll be able to do a show. If I can, maybe by Wednesday I'll be able to. I'll let my subscribers know and let TFNN know that I'm able to do it. Meantime, have a great week. Parameters are real clear. All-time high in the Dow says, whoops, we aren't there yet. Just a little bit more residual strength, but a breakdown in the Dow. I'm using the Dow as a benchmark because it's been a leader so far. The Dow needs to break 21,200. A close under that says, okay, now we've started the consolidation much deeper. Thanks for being here. Stay tuned for everyone else. Great program coming up. Have a great weekend. And my subscribers, I'll be putting out the charts during the week and over the weekend. Have a great week.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.